The best hedge fund in history, the Medallion fund, averages 66% gross annual returns. They hired the best mathematicians on the planet, spent billions on infrastructure, and kept it so secret that employees signed lifetime NDAs. I am a humble retail investor. I trade from my phone. And over the last 3 years, from 2023 to 2025, my XIRR is 79.22% annualized. Today I'm going to show you everything, the strategy, the biggest wins, some painful losses, and the exact system that made it possible. And I'm going to do it with proof. My name is Rohit. This is Active Investing, and this video will be the most transparent one on YouTube on how to beat the markets. Let me start with what you actually came here for, the proof. This is my brokerage account on IND Money. I started investing in US stocks in late 2022. My first trade was on October 3rd, 2022. I bought Palantir with an SIP at around $8. Since then, I've made over 1,600 trades across 182 different stocks. Here is what 3 years of active investing looks like in real numbers. My overall XIRR for all the trades till 9th March 2026 is 75%. To put that in context, the S&P 500 returned roughly 12% annualized over the same period. Warren Buffett's Berkshire Hathaway did about 15%. The average hedge fund just 8 to 12%. Now I know what you're thinking. Anyone can cherry pick a good period, and you're right to be skeptical. So let me show you exactly how this happens, starting with the biggest winners. Across those 1,600 plus trades, I had 33 that returned over 50%. The biggest single trade was Sharpling, a small cap that returned 183% in about 5 weeks. I bought it to ride a crypto treasury company's narrative or trend. Another trade I'm proud of, AMD. On 3rd October 2025, I bought AMDL, that is just a 2x leveraged AMD ETF. 3 days later, on October 6th, AMD announced a massive multi-year partnership with OpenAI. The stock gapped up 24% in a single day, its biggest move in 9 years, and I was already in. Was it luck? Partly, but there's a reason I was positioned in. AMD had been building out its AI GPU pipeline for months. The rumors around a major partnership had been circulating. The fundamentals were improving, while the stock price lagged behind Nvidia. The gap between fundamentals and price is where I live. That AMDL position, it hit 111% profit by November 3rd. 1 month, 2x leverage, one massive catalyst. Another huge winner from the crypto treasury company's narrative was Upexi, which returned 156%. Then Big Bear returned 68%, Cypher returned 58%, Tesla's 2x ETF returned 62%. Each of these had a thesis behind it. Fundamentals improving, price not yet reflecting it, and a catalyst approaching. And also some momentum capture from compelling narratives. Now here's the part most finance YouTubers skip. I had 18 trades that lost more than 30% and 3 trades that even crossed minus 50%. My single worst trade was SBIT. Yes, the same Sharpling stock that gave me 183%, I lost 70% on a different entry. CONL, a 2x Coinbase ETF, cost me 50% during a volatile stretch in July 2024. And more recently, I couldn't even capture much of the AI memory narrative in Jan and Feb 2026, where SanDisk and WD went up like crazy. Then there is also Palantir. I first discovered it at around $6 to $8 per share in late 2022. But instead of holding, I kept trying to swing trade it. I made over 200 trades on Palantir alone, and I exited my last position at around $68. Due to my bad choice of swing trading an extremely volatile stock, which was also fundamentally strong by the way, my overall investment in Palantir did not even triple, while the actual price did a 10x. And just a few months after I sold all of it at $68, it even touched $200. I left serious money on the table, and that is the honest truth. So here is what might surprise you. My overall win rate is just 51%, basically a coin flip. Half my trades made money, half lost money. So how do you get to 79% XIRR with a 51% win rate? Asymmetry. My average winning trade returned 14.8%. My average losing trade lost 8.3%. That means when I'm right, I make almost twice of what I lose when I'm wrong. Over 1,600 trades, that asymmetry compounds into something massive. This is the fundamental misunderstanding people have about active investing. They think you need to be right at least 70 to 80% of the time. You don't. You need your wins to be bigger than your losses. The way I do this is by combining three things. First, fundamental analysis. One easy way is to check whether the company's PE ratio is falling while revenue is growing, whether earnings are accelerating yet the price is stagnant, whether the business is actually getting better. Second, basic technical analysis. I look at things like major support and resistance levels, price bouncing off the 200-week moving average, and volume spikes. If a stock that has been flat suddenly sees a 300% volume spike without much of a price move, that often signals institutional buying. And third, narrative awareness. Is there a macro catalyst approaching, an earnings report, a geopolitical event? Last Friday, I bought a 2x oil ETF because I saw the US-Iran war probability spike up on Polymarket. Oil prices gapped up on Monday morning. So before starting to invest in US stocks, I was investing in the Indian stock market and doing comfortably better than the indices. But I made a deliberate shift in 2022, and here is why. I use products from Nvidia, Apple, Microsoft, Meta, Google, Amazon every single day. I understand these businesses because I am a regular customer, more than Indian companies. That is an edge most people underestimate. Also, the US market is where the biggest innovations are happening, especially in AI, which is the mega trend of this decade. And the liquidity is unmatched. I can enter and exit positions instantly with tight spreads, even in small caps. If you're watching this from anywhere in the world and you're not investing in US stocks, you're leaving the world's most dynamic market on the table. So this channel is going to be different from what you're used to. I'm not going to tell you to buy and hold index funds and wait 40 years for compounding to kick in. I'm not going to pretend I have all the answers. And I'm not going to hide my losses either. What I'm going to do is show you, with real money and real data, exactly how I find trades, when I enter, when I exit, and the most important, why I do that. Active investing, done right and with transparency. My next video will break down why the most famous investor in history, Mr. Warren Buffett, may not be the role model you think he is, and why that is actually great news for you and me. Subscribe if that sounds like something you would like to see. I am Rohit, this is Active Investing, and I'll see you in the next one.